Thanks for joining us. This is Business Incorporated and I am BC Adebayo. On the program today, Equatorial Guinea accepted as a new member of the Organization of the Petroleum Exporting Countries, and Kenya Airways records lower pre-tax profit in the year to end March. Plus, Djibouti formally opens one of 4 new ports designed to cement the tiny Horn of Africa's position as a continental hub. Well, let's kick off the show right here in Africa, where all the indices are up at intraday except the South African index. Nigeria's all-share index appears to be extending yesterday's gains at intraday with a 0.72% surge. The EGX 30 was also up 1.68% at intraday, while the Kenyan index is seen higher by close to 2% at the end of Wednesday's session. The GSE index is the only market in the red with a 0.24% drop at intraday. And we're now to the Middle East, where shares of Qatar's largest listed real estate developer tumbled in early trade today after saying its shareholders had given preliminary approval to take the company private. This sent Qatar's index down 0.27% at intraday. Dubai's index fell 0.73%. In Abu Dhabi, the index was down 0.34%, with the main drag coming from blue chips. Saudi Arabia's index, however, rose 0.08% at intraday, led by consumer-related shares. And in Europe, markets were higher today as OPEC agreed to extend output cut by 9 months, and the latest leg of U.S. President Donald Trump's first foreign trip since taking office continues. Well, let's bring in Conrad Boson from Frankfurt to know how these are playing out on the markets. Conrad, so tell us what's happening to the oil and gas stocks as OPEC agrees to extend production cut deal.
Well, BC, there's a bit of a negative reaction here. The shares in American oil producers, which are also traded here in Europe, are a bit more on the downside than shares in, European oil and gas producers. But all of them, are trading lower. And of course, also the oil price slipped significantly after OPEC announced these production cuts. Quite obviously, there had been a few trades out there, speculative one, speculating that OPEC might announce deeper cuts than the ones that it just announced, this sheer prolongation of those production cuts. Now, a majority of analysts and also commodity traders don't expect that the price of oil will rise significantly above $50 a barrel in the near future, because everyone knows that at a price of more than $50 a barrel, fracking in the United States, hydraulic fracturing, this shale oil production becomes more profitable again. So it's quite likely that we're going to see more supply from the United States very soon.
Now, talking about the United States, President Donald Trump is meeting with the EU and NATO leaders in Brussels in the latest leg of his international tour. Is the market interested in this meeting, and what's on the agenda for discussions?
Well, of course, the market is always interested in news about Donald Trump, and especially on this day when he comes to visit the hellhole. That's what the U.S. president once called the capital of Belgium and capital of the European Union, if you like, Brussels. He also called our military alliance NATO obsolete. He also called the European Union names, and he praised Brexit. So I would say there is some juice in this visit of the U.S. president to Brussels. But of course, most of the politicians and most of, people like us, the media, got used to a U.S. president calling others names. So it's quite likely that the politicians, the European ones in Brussels, will do everything they can in order to find some common ground with Trump. By the way, Angela Merkel, who will travel to Brussels today, not only meets Trump today in Berlin before hopping on that plane to Brussels for the more or less 1-hour flight. She meets Barack Obama. He's the guest of honor at the yearly convention of the German Protestant Church, celebrating the 500th anniversary of the Lutheran Reformation. So this is why the German Chancellor gets to meet 2 U.S. presidents today, first Obama, then Trump.
Quite interesting there. But Conrad, before I let you go, tell us what are the news is coming out of Europe for investors and the markets?
Well, we have economic growth from the UK, which was reported for the first quarter, and this reading shows that growth in the UK economy was rather weak, only up 0.2% compared to the end of 2016. That's much weaker than a majority of analysts had predicted, and I think this is worth mentioning. Only 1 in 42 of economists asked for a forecast by the Reuters news agency predicted such a low economic growth in the UK, and this shows that still it's very difficult to evaluate what's going on in the UK after the Brexit referendum. And it will likely continue to be difficult. Besides this, positive is that the 100 share index in London is sort of eyeing a new record high. Yesterday, the S&P 500 in the United States reached a new record high. So the general mood on the equities markets remains quite upbeat and quite positive.
Oh, we'll see how that plays out at the end of the day. But thanks, Conrad, for this updates there, and do enjoy the rest of your day.